Joe, good to see how you're doing. You're the first one in today. Weekend was good. Was all over the place. How was your weekend, Joe? Artistic, good to see you as well. How's things? Things are good. Good to see you as well. How's things with you? Morning, Miles and CMF. Shelly, good to see you as well. Morning. How you doing? How you been? Hope you had a great weekend as well. Hope everyone had a great weekend. Okay, I was just trying to pin the live. There we go. It's pinned now officially. Okay, a few things have been happening, which we're going to cover on tonight's live show. So what we'll do the intro, disclaimer, what we're going to talk about on tonight's live. By that time, everyone's hopefully tuned in for the first part of the live show. Good day, brother Miles. How's things? Things are good. Good to see you all coming to us. How you doing? Hi, Miles, my brother. Paul, good to see you all. How you doing? How you been, brother? Okay. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Miles Family. My name is Miles. You can tune to this live Monday, Friday, 10 p.m., long time onwards for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Pretty much all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live show, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. This is episode 458 of the CMF Live show is watching right now. And on tonight's live, these are the topics we're going to be covering. We're going to be talking about essentially crypto holding its ground during this essentially US, Iran, and Israel war. We're also going to be talking about on tonight's live regarding the US, UK, and Canada possibly creating some sort of a crypto operation, which is incredible to see. We're also going to go through news on tonight's live show regarding Circle's USDCs doing some incredible work. We're going to go through news on tonight's live regarding Bitwise's essentially chief investment officer's newest perspectives on the market space. We're also going to talk about on tonight's live regarding a particular crypto asset class that we rarely cover on this live show for many reasons. But once we get to the news, I'll reveal what it is. We're also going to talk about tonight's live regarding essentially the crypto age of hype is pretty much done with. And now we're just moving into a structured, foundational, essentially crypto movement, which again is amazing to see. We're also going to talk about Meta Planet on tonight's live show as well, the Japanese essentially MicroStrategy company. We're also going to talk about tonight's live regarding the NASDAQ. Now, we previously talked about the NASDAQ thinking about tokenization. They did some essentially announcements, some testing. You could even possibly say there's more updates on that, which we're going to cover on tonight's live. We're also going to go for news on tonight's live regarding Visa. The last time essentially we talked about Visa and MasterCard is when they were essentially doing some implementations of crypto blockchain projects. And this time is around is about Visa and Coinbase pretty much being on the same page for the future these two massive essentially companies see. We're also going to talk about tonight's live regarding Bitpanda essentially. The crypto broker essentially Bitpanda, betting on banks and crypto companies working together rather than competing against each other. We're also going to talk about tonight's live regarding Australia. Essentially, a particular country that we rarely cover on this live show because, just like the UK, they don't really, essentially involve themselves too much inside the crypto space. But this time around, Australia is essentially taking the ranks and they're doing more for the crypto space than the UK is doing so far. We're also going to talk about tonight's live regarding the European Central Bank as well, green lighting a particular crypto asset. And we're going to go through essentially news on tonight's live regarding Ripple's CTO David Schwartz, essentially argument or perspective against another essentially crypto analyst, you could possibly say, or crypto essentially someone that hates XRP versus someone that knows XRP and understands XRP essentially is what we're essentially cover on tonight's live. Now the first topic is regarding essentially Bitcoin, cryptocurrencies, Iran, US, Israel, and what's happening so far, what's happening inside the market space is how is crypto still standing its ground during this war. It really didn't stand its ground at the beginning of this war, but throughout this war, it actually has stood its ground. I explained a while ago why it would possibly stand its ground. It's because of the money laundering situation. However, there are essentially other reasons of why crypto is standing its ground. Now, before we talk about that, let's go inside the comment section first. This was happening there, and then we go straight into the first news on tonight's live. By the way, thank you so much to everybody who has straight away liked and essentially retweeted this live show. Thank you so much to every single one of you CMF members. So let's see where we're at before we saw on the first essentially news. We were here. T, good to see you as well. How you doing? Hello, Miles. Hope you had a great weekend. Good to see you back, brother. Let's go to you. How you doing? Good evening, Miles. Of CMF Free and Forever. Good to see you as well. How you doing? Good evening, all. Let's go and share the live. Let's go, JP. Good to see you as well. How you doing, brother? Good evening, Miles of CMF. Bullock Soppy. Good to see you as well. How you doing? My weekend was very quiet. I caught a cold. That's not good in any sort of way. I don't know why, but my voice has changed as well. I think maybe I'm, essentially catching some sort of weird cold as well. I'm not sure yet. Now, first news on tonight's live. Bitcoin sold off first when the US war in Iran essentially began. 2 weeks later, it's outperforming nearly everything else inside the market space. The onset of the US and Iran conflicts initially triggered a sharp, essentially unconditional surrender of risk positions across the board, with Bitcoin falling in tandem at the beginning, essentially, of this war with global equities. This knee-jerk, essential reaction briefly short-circuited the digital gold, essentially, narrative as the financial plumbing of the market favored immediate liquidity and cash reserves rather than risk-on assets. However, as the initial shocks essentially subsided, the legacy banking essentially blockade faced increasing pressure from the geopolitical uncertainties in the utility era of 2026, and it saw a rapid essential reversal in sentiment, with Bitcoin's decentralized essentially nature once again becoming its greatest essentially strength there is. Just 14 days after the escalation essentially war began, Bitcoin has decoupled from traditional risk assets to lead a broad essentially recovery. Safe haven pivots after initial flush of leveraged positions, institutions and essentially institutional on-ramps saw a significant essentially increase in volume as investors sought protection from the instability of the old traditional essentially market space and fluctuating essentially national financial infrastructure. Resilience under pressure. While the traditional stocks have struggled to regain their footing, essentially aimed energy price volatilities as oil prices are slightly rising as well, and due to the recent attacks essentially that the US did, which I don't mind in any sort of way, as everyone knows where I stand. I stand with the US and Israel against Iran, and I'm Iranian myself, as I've said millions of times. And where essentially the US attacked essentially the island of essentially Khark, which is essentially Iran uses as their money printing machine, pretty much. That essentially caused some sort of a shock again in the essentially in the energy prices of the world. It didn't cause a shock in Bitcoin or the rest of crypto market space in any sort of a way, which was good to see. Transparent sentiments, the clarity and essentially of the ledger provided in the utility alternative for essentially global value transfer during a period of heightened international tensions, meeting essentially also the rigorous expectations under a US Clarity Act, which is what we'll essentially be expecting very soon. This rapid recovery and essentially outperformance we're seeing suggests that the 2026 global economy is increasingly viewing Bitcoin and cryptocurrencies as a necessary component of a diversified essentially portfolio during times of war. Analysts also point out the asset's ability to bounce back so quickly indicates a maturing essentially market space rather than a speculation market space, and it absorbs the macro shocks essentially more efficiently than the previous cycles we've experienced. As the conflict continues inside the Middle East and essentially shape global policies, the performance of decentralized networks serves as essentially powerful validation of their role as a permanent high utility pillar of the modern world's financial architecture. Crypto market space is actually doing pretty damn well for itself during this war. This war is still continuing. Missiles are still dropping as we're speaking in the Middle East. And energy prices are not doing too well either. Yet, at the midst of all of this, Bitcoin standing its ground, which is impressive to see, which is also one of the things I said, the money laundering situation, that is also still happening as missiles are dropping. But also, on the top of that, this is also being seen as a test for the crypto space of how it will react in a genuine, borderline, some people might even say, World War III scenario. Now, World War III will never happen, but it's been described as a borderline essentially World War III. But it's nice to see that crypto is, not reacting drastically, sharply, up, down, swinging everywhere. It's actually holding its grounds very stable, you could pretty much say. So this has been essentially a big test for the crypto space as well. During internet blackouts, for example, in Iran, crypto was still doing transactions. It was even suggested that even if Iran decides to cut the wires in the middle of the sea, which could cause a massive internet blackout essentially in Europe, especially, that crypto, essentially Bitcoin specifically, will still survive even during those blackouts, is what was suggested by many analysts. But other than that, crypto is definitely standing its ground. But I'll tell you what, one crypto project in particular that's doing impressively well today is XRP by a long shot. It's leaving everything else behind. Now, US, UK, and Canada start Operation Atlantic to disrupt the crypto approval phishing scams. Authorities inside the United States and the United Kingdom and Canada have launched Operation Atlantic, a coordinated international crackdown targeting essentially the rising tide of approval phishing scams. This multi-essentially jurisdictional task force aims to dismantle the criminal essentially financial plumbing used to trick users into signing malicious transactions that grant scammers full control of their digital wallets. By pooling intelligence, essentially enforcement resources, these nations are flipping the switches on sophisticated cyber essentially attacks that have exploited the 2026 digital economy's growing on-ramps to siphon billions of dollars from unexpected essentially participants. The UK, Canada, and also essentially the US are taking this extremely seriously, which is good to see. Honestly, after what we experienced on Friday's live show, which was essentially the FDIC saying we can't insure essentially we can't insure stable coins, but we can insure the banks with the US dollars, even though the stable coins, in terms of USDC, RLUSD, USDT are actually backed by fiat US dollars as well, alongside essentially gold and US bonds and US treasuries and so on. But saying, on Friday, the FDIC essentially saying, we can't compare, essentially we can't insure stable coins, which in the eyes of the investor or the essentially holder who just wants to hold digital dollars or essentially fiat US dollars, it didn't seem attractive for them to go towards digital US dollars and almost stable US dollars, essentially stablecoin US dollars, because it wasn't insured by the FDIC. And it's just, a dampening of what the FDIC did. But now to see that the US today on Monday, the US, Canada, essentially, and the UK taking things into their own hands to protect the crypto space in general, not just stablecoins, what something the FDIC struggled to do, catering towards the banks, it's nice to see that's happening. The operation highlights a strict shift towards hardening the national financial infrastructure against decentralized fraud, targeting malicious, essentially smart contractors. Operation Atlantic focuses on identifying and blacklisting essentially addresses that deploy deceptive approval prompts, ensuring that essentially the high utility nature of the ledger is not undermined by the people essentially that are trying to abuse it, in other words. Unified enforcement standards. The collaboration aligns with the consumer protection mandates of the US Clarity Act, signaling that the old traditional, essentially old guard, in other words, of the law enforcement is now fully equipped to track and seize assets across global settlements layers. Cross-border intelligence, essentially also sharing, is happening as well by breaking through the traditional information, essentially blockades. The task force can also execute real-time distributions of phishing essentially domains, preventing an unconditional surrender of user funds to offshore criminal essentially entities. As Operation Atlantic gains momentum, officials emphasize that while enforcement is critical, user education remains a cornerstone of the 2026 global economy's security. The task force is working alongside major wallet providers to implement clearer warning systems that flag high risk essentially approval requests before they are executed. Analysts also suggest that this proactive, essentially international stance is essential for maintaining the trust in the Genius Act's vision of widespread digital asset essentially adoption, ensuring that the future of finance remains a safe and transparent environment for all global citizens. So, as I said, while the FDIC couldn't essentially protect people who wanted to hold stablecoin, digital essentially stablecoins, and dollars in other words, the Americans themselves, the US itself, Canada itself, and essentially um, the UK have come together to create some sort of essential operation to safeguard the entire crypto space. That is incredible to see. It's a shame the FDIC couldn't even protect the stablecoin sector by catering towards the banks, but America itself is trying to protect the entire crypto space. Now, there are other reasons of why this is happening now, because there has been information released specifically from essentially Chain Analysis, for example, a very credible source when it comes to the crypto space, who have disclosed that countries like North Korea or Iran have ciphered billions of dollars in cryptocurrencies under the table because to avoid sanctions. So there are reasons of why this is happening right now as well. But alongside that, it's also safeguarding everybody else inside the crypto space because a lot of people need to understand the crypto space, just like any other market space around the world, isn't just rainbows and sunshines, and there are gray areas. And people need to be a lot more educated when they enter the crypto space, not thinking that everything, essentially, as I said, it's not going to be rainbows and sunshines in any sort of way. That there are areas that you shouldn't go towards, and you can get scammed if you don't know what you're doing. You can click on a random link, for example, connect your wallet to somewhere you shouldn't, somebody telling you to move your assets pretending to be from Trust Wallet or Binance or Coinbase. So it's the same things that you would do protecting your bank accounts by not essentially answering to anyone who calls you, pretends to be from the bank, or essentially a fake email from your bank and so on. It's the exact same things that you do in the traditional sense, you would have to do to protect yourself in the digital space as well. Now, putting all that to one side, Circle. Circle is up 100% in a month. That is impressive, however way you look at it. While this boring stablecoin is suddenly the hottest trade in crypto, Circle's USDC has seen its market activity and utility metrics surge by 100% over the last month, transforming essentially what once was considered a boring stablecoin into the primary engine of a current market rally. This sudden dominance signals that 2026 digital economy is flipping the switches towards assets that prioritize transparency and liquid reserves over speculative gain. As the legacy banking blockade continues to create friction essentially for traditional fiat transfers, USDC has emerged as the high utility on ramp of choice for institutional players seeking a seamless entry into the global settlement layers. The explosive essentially growth of USDC reflects a broader shift in the financial plumbing of the digital asset ecosystem. Flight to quality. In an environment of heightened essentially geopolitical tensions, investors are moving away from offshore essential alternatives and towards USDC, which is seen as a cornerstone of national financial infrastructure due to its alignments with the US Clarity Act. Now, there is another essentially stablecoin that's also aligns with the US essentially Clarity Act as well, is RLUSD. USDT is not on that list pretty much for now. DeFi and essentially AI integrations. The rise of autonomous AI agents has also created a massive demand for stablecoin programmable value. USDC's deep integration into decentralized protocols ensure it remains the preferred currency for automated 2026 global economy transactions. Traditional settlement layers, major traditional essentially firms bypassing the traditional systems essentially of slow settlement cycles by using USDT for real-time collateral management, a move that embodies the efficiency goals of the Genius Act without essentially requiring unconditional surrender of regulatory compliance. Industry analysts also suggest that the boring nature of Circle's asset is precisely what makes it the hottest trade in the current cycle. As the market matures, the demand for predictable, audited, and highly liquid instruments is outstripping the desire for high volatility tokens. Just to repeat that one more time. The demand, essentially, as the market matures, the demand for predictable, audited, and highly liquid instruments is outstripping essentially the desire for the volatility tokens. This trend indicates that the future of Ledger will be built on stability and trust, ensuring that 2026 digital economy remains resilient and accessible to the world's largest financial institutions. Now, there aren't that many essentially crypto projects that are, completely transparent. Some of them don't have any sort of licensing. Some of them are not headquartered in the US. There's no company behind them. It's just a foundation or some developers or people we don't even know who they were that created the project. But there are projects that we do know who's behind it. For example, we know that XRP, Ripple, we know that Solana Foundation, AVAX Foundation, Ethereum, essentially Vitalik Buterin, and so on and so on. These crypto projects do show transparency, and some of them have more licensings than the other, which is even better going into a regulated, essentially crypto space inside the United States or the world, you could pretty much even say. But it's telling you, one, that regulated crypto projects will do a lot more better going forward. And two, if there are people running towards USDC or stablecoins in general that provide that transparency and liquidity, that is incredible, because then later on that USDC will be turned into essentially Bitcoin or XRP or XLM or XDC or HBAR or Solana or AVAX or Chainlink and so on, or Rondo, for example. So that money entering into stablecoins is later on going to be essentially be a part of other crypto projects as well. So people shouldn't just look at it, oh, stablecoins are going up, but essentially if stablecoins go up, then there's a chance, or a high pretty damn chance, of that money not staying mostly in stablecoins from those investors and going into essentially flowing into other crypto assets. Again, based on the legitimacy of those crypto assets and the licensing and transparency of those crypto assets, not the volatility ones. Now, not the volatile ones. Bitwise's Chief Investment Officer Matt Hugan has highlighted a significant shift in market behavior. Based on what we just talked about right now, Matt Hugan is pretty much saying the exact same thing, noting that institutional investors exhibited diamond hands during Bitcoin's recent 50% drawdown. This resilience among essentially large scale capital allocators suggests that the traditional finance, essentially financial space, has moved beyond speculative, essentially, mindsets and is now viewing digital assets as a permanent component of 2026 digital economy. Rather than essentially engaging in unconditional surrender to the market volatility, these institutions use the dip as a straight on-ramp to strengthen their positions within the global settlement layers. The stability of institutional holding during this period underscores a fundamental, essentially, change in the market's financial plumbing. Sophisticated risk tolerance, for example. Institutional players are increasingly looking past short term price fluctuations and focusing instead on long term high utility roles of the ledger as the cornerstone of national financial infrastructure. Or regulatory confidence. The presence of a clear framework that's coming very soon, which is the Clarity Act, is also putting essentially the market on edge that maybe, high profile institutions are now thinking to themselves, we should stop thinking about short term because now the regulations are just pretty much around the corner, and that we should be spearheading towards these crypto assets. Alignment with strict growth. This steadfast essentially aligns with the objectives of the Genius Act, as institutional participation helps to flip the switch from retail driven markets to one categorized by professional grade stability and transparency. Hugin's observations suggest that the 2026 global economy is entering a more mature, essentially, phase where weak hands are being replaced by entities with long term horizons. This shift is critical for the continued development of on chain financial systems, as institutional diamond hands essentially provide the liquidity and stability required for the mass adoption. As the market essentially recovers, the focus remains on how this institutional base will influence essentially the next wave of infrastructure projects, further integrating decentralized networks into the traditional world of global finance. Look, that is honestly incredible to see. And it is facts, to be fairly honest as well. I've said this for the longest time. Before going into 2020, essentially six, we discussed that essentially the next clientele is going to be institutional clientele, because we saw every traditional institution and also essentially the neobanks and even essentially the crypto space starting some sort of departments to cater to high profile investors going into 2026. So it's a given that that was going to be happening. And now you have Matt Hugan, essentially chief officer of essentially Bitwise Exchange, coming out essentially and saying, look, we can see the numbers rising essentially in terms of high profile investors and essentially institutions entering the crypto space, and the ones that are in the crypto space even from before have increased their positions, and now they're calling the institutional sector the diamond handers inside the crypto space. Imagine that the institutions are being called diamond hands now. Diamond hands was referred to the crypto space when it was the retail section, and the retail section were going up against essentially institutions, and the crypto sector, essentially retail section, was seen as the diamond hands inside the crypto space. Now the tables are flipped, where the institutions are becoming the diamond hands, which just tells us how close we are to that finishing line when the institutions are becoming diamond hands. Now, before we go through the next news on tonight's live, let's go inside the comment section first. The next news is a bit of an interesting one, to be fairly honest. Before we talk about that, let's go inside the comment section first. Let's see what's happening there, and then we go straight into the first news on tonight's live. Let me go straight into the next news on tonight's live, not the first news, the next news on tonight's live. Now, let's see where we're at. Good evening, Miles and CMF. Manny, good to see you. How you doing? Hi, Miles and family. Alex, good to see you. How you doing? Good evening. Good evening, Miles and family. Ian, good to see you. How you doing? What up, Miles and CMF? Happy Monday. Hope all is well. Ray, good to see you. How you doing, brother? Hi, Miles and CMF. Stormy, good to see you. How you doing? Hi, Miles and everyone. One love. Good to see you. How you doing? The market has been very stable considering the war situation, which is good to see. Exactly, it is. Hi, Miles and CMF. Peg, good to see you. How you doing? Good evening, Miles. How you doing? I'm doing great. Callie, good to see you. How you doing? Hello from Israel. How you doing? Welcome to the live show. I can't pronounce your name because it is written in Hebrew, I think. I'm not sure, but hi there from Israel. Now, T. Rowe Price, essentially a $1.8 trillion asset manager, is ready to put two particular crypto assets in their crypto ETF. Now, this might surprise some people. This might essentially make a lot of people happy inside the crypto space. But before I tell you which crypto projects there are, these are two of the three crypto projects I said in that particular category I think would have some sort of a future compared to the rest in the entire category. And those two crypto projects are Dogecoin and Shiba Inu. A $1.8 trillion asset manager is ready to put Shiba Inu and Dogecoin in their essentially ETF, in their new crypto ETF. T. Rowe Price, a titan managing $1.8 trillion in assets, has signaled a major shift in institutional strategy by including Dogecoin and Shiba Inu in its latest cryptocurrency ETF filing. I said, I've been asked many times on this live show, when it comes to meme coins, and I'm not a big fan of them, but I've always said the three that I see possibly a future for, because one is Dogecoin because of Elon Musk, two is Shiba Inu because of the community behind it and that one oil contract they had, which was pretty damn major. And I said the third one is essentially Luna. And the two of those that I've been saying for the longest time have actually made it to the list of a titan. A $1.8 trillion asset manager is about to be putting Shiba Inu and Dogecoin on their list for the next crypto ETF, essentially crypto ETF. This move represents a startling flip of the switches for the traditional, essentially asset managers, as once ridiculed, essentially meme coins are now being packaged into institutional grade financial plumbing. By integrating these assets, the firm is providing a massive on-ramp for traditional investors to access the high-velocity segments of the 2026 digital economy, suggesting that even the most conservative corners of the Wall Street essentially are moving past the legacy banking blockade. The decision to include community-driven assets and a diversified ETF underscores the evolving nature of the 2026 global economy. Institutionalization of meme liquidity. By applying the rigorous custody and reporting standards of the US Clarity Act to these assets, T. Rowe Price is attempting to transform volatile tokens into high utility instruments for diversified portfolios. National infrastructure integration. The inclusion of these tokens in a regulated ETF framework aligns with the goals of the Genius Act by bringing essentially massive retail liquidity into a transparent, taxable, and supervised essentially national financial infrastructure. The utility era pivot. This strategy reflects an unconditional surrender to market demands as institutions recognize that massive social layers and settlement volumes of these networks essentially are too large to ignore when building modern global settlement layers. Analysts view this development as a watershed moment for the legitimacy of the broader ledger. If a $1.8 trillion manager can find a place for these assets within a regulated product, it suggests that the definition of institutional grade is being permanently rewritten as we know it. As the filing moves through the approval process, the focus remains on how these historically volatile assets will behave when plunged into the disciplined world of professional fund management as well, potentially setting a new precedent for the future of 2026 global economy. So if you are somebody that is holding Shiba Inu and Dogecoin for the longest time, that is extremely good news for you. A 1.8 essentially a $1.8 trillion asset manager has just put Shiba Inu and Dogecoin on their list for their next essentially ETF. It's massive news. Now, crypto's age of hype is over. We can definitely see that. I mean, a $1.8 trillion asset manager just put two top meme coins essentially on their essentially list of ETFs. So crypto's age of hype is over, making way for the real infrastructure to be built. The digital asset landscape is undergoing a fundamental shift as the speculative frenzy of previous years matures into a period of focused, essentially building robust financial plumbing. This transition marks the end of the hype cycles and the beginning of the high utility era, where the 2026 digital economy is defined by durable architecture rather than temporary price action. As the traditional financial space begins to integrate these technologies, the focus has moved towards creating seamless on ramps that allows decentralized networks to function as a reliable backend for the world's most critical, essentially global settlement layers. This new phase of development is categorized by the commitment, such commitment to long-term stability and integration. Functional integration. Rather than chasing retail trends, developers are now prioritizing the creation of a national financial infrastructure that can handle essentially complexities of institutional settlements and cross-border value transfers. Regulatory maturation. The industry is moving away from its unconditional surrender to legislative essential uncertainty, instead of embracing the clear frameworks provided by the US clarity to build compliant, transparent systems. Institutional alignment. Projects are increasingly designed to meet the technical and security requirements of the Genius Act, ensuring that the ledger serves as a transparent and efficient pillar of this modern financial world we're about to be entering into. As the industry essentially moves towards the flipping of the switches from marketing to engineering, the focus remains on overcoming the legacy banking blockades that once slowed progress. The current environment favors projects that offer real-world essentially solutions for managing liquidity and securing data across decentralized networks. For the 2026 global economy, this era of silent construction ensures that the future of finance is built on a foundation of actual utility, providing the resilience of a transparency necessary to support the next generation of global markets. We are definitely moving away from speculative inside the crypto space day by day, I would have to say, when now the institutions, as I said, are being called the diamond hands inside the crypto space, which was only referred to the retail section a long time ago. MetaPlanet is what we're going to talk about next on tonight's live. MetaPlanet is essentially the Japanese version of essentially Michael Saylor's company strategy. They copied the exact blueprint essentially Michael Saylor left behind, but as a Japanese firm. And now this is what's happening over there. MetaPlanet raises $255 million to accelerate their Bitcoin accumulation. MetaPlanet has successfully secured a $255 essentially $1 million in fresh capital to aggressively expand its Bitcoin holdings, further solidifying its reputation as the MicroStrategy of Asia. This significant capital raises essentially marks a decisive moment for the firm as it moves essentially onto its corporate treasury strategy, transitioning from traditional cash management to a Bitcoin-centric model. By tapping into the 2026 digital economy's appetite for decentralized reserves, MetaPlanet is demonstrating how corporate financial plumbing can be redesigned to leverage high-utility digital assets as a primary hedge against currency devaluation. The firm's rapid accumulation strategy highlights a growing trend among the essentially traditional financial sector. Streak reserves and expansions. The $255 million in influx will be used to establish a massive on-ramp for Bitcoin, positioning the company as the major institutional holder in the essentially with the global settlement layers, modernizing the balance sheets. By replacing legacy debt and cash positions with on-chain assets, MetaPlanet is aligning its corporate structure with the stability goals essentially often championed in the Genius Act, seeking a long-term resilience and over short-term essentially fiat gains. Institutional signaling. This move serves as a validation of the transparency and reporting standards established by the US Clarity Act, essentially proving that large-scale accumulation can be conducted responsibly with essentially a modern national financial infrastructure. As MetaPlanet accelerates its accumulation, analysts are watching for an unconditional surrender of the traditional skepticism that has historically essentially kept Asian corporations from adopting to digital essentially native treasuries. The success of this capital raise indicates that the banking blockade of the past is failing to stop the migration of institutional wealth onto the ledger. For the 2026 global economy, MetaPlanet's bold stance serves as a blueprint for how international firms can utilize decentralized networks to protect shareholder value in an increasingly volatile macroeconomic environment. Big things are happening essentially in Japan. It is a watershed moment for Japan as well. Being an Asian company, essentially, is very restrictive on what they can and can't do, and especially moving away from essentially this fiat-based system to a Bitcoin-centric essentially system of having digital assets on their balance sheets. It's one of a kind for the Japanese market space. You can pretty much say that. Other than putting aside Ripple SPI as well, but they are doing they're they are definitely 100% the Japanese version of Strategy Michael Saylor's company. Incredible things, to be fairly honest. Now, it does show credibility when they're able to raise $255 million in a time like this when there's a war happening in the Middle East with over 20 countries. Now, the NASDAQ and the New York Stock Exchange owner are putting $126 trillion equity markets on the blockchain. I mean, from where we were to essentially where crypto going is now, essentially, it's tremendous. It's absolutely tremendous from where crypto was to where it's going now. Where NASDAQ, New York Stock Exchange owner, are about to put $126 trillion equity markets on the blockchain. The leaders of the world's most prominent stock exchange, Nasdaq and ICE, the owner of the New York Stock Exchange, have officially begun the massive undertaking of migrating the $126 trillion global equity markets onto blockchain technology. This momentum shift represents essentially the ultimate flipping of the switches. For the 2026 digital economy, as the essentially traditional markets of Wall Street moves to replace aging financial plumbing with decentralized settlement layers. By tokenizing traditional stocks, these exchanges aim to dismantle the legacy banking blockade that has long caused multi-delays essentially in settlements and high operational costs. The transition to an on-chain equity market essentially is driven by the need for a more efficient and transparent financial infrastructure. This isn't just talks. This is essentially the owner of the New York Stock Exchange coming forward and saying, we're about to put $126 trillion essentially market space on the blockchain. Essentially instant settlements. Moving to the ledger allows for a T+0 settlement, providing essentially high utility environments where ownership of shares is updated in real time, matching the speed of the 2026 global economy. Regulatory harmonization. This project is being built in direct alignments with the US Clarity Act, ensuring that the migration of trillions in assets meets the rigorous transparency and reporting standards required by the federal essentially regulators. Programmable capital. By utilizing the principles often promoted in the Genius Act and tokenized equities will allow automated divided payments and corporate essentially actions, essentially providing the on-ramp for a new era of programmable essentially finance. The decision by the Nasdaq and ICE to embrace blockchain essentially marks the unconditional surrender of traditional clearinghouse models that have dominated for decades. Analysts believe that by moving the world's largest equity markets onto a unified, transparent ledger, the risk of a black swan credit event is significantly reduced. That is a crazy statement to make, but it's quite factual as well. This is the owner of the New York Stock Exchange essentially coming out and saying, if we move the $127 trillion equity markets on the blockchain, we can essentially, ever so slightly miss a black swan event, in other words. That's essentially, as this multi-year rollout continues, the focus remains on ensuring that the stability of the global financial system is maintained while its underlying architecture is completely modernized for the digital age. We went from the crypto space being a scammer and a legal, essentially criminal place, to now the crypto space being the space that saves the New York Stock Exchange. That's a bold statement. It's a bold statement and a very true statement. Crypto went from speculative to saving the New York Stock Exchange from a black swan event now. And that speech, or that quote, is coming from the owner of this essentially New York Stock Exchange. I mean, you couldn't get more bullish than that when a $127 trillion market space, $127 trillion equity essential market space is about to be entering the blockchain. Not only that, but the owner of that market space says that the crypto space is actually going to save the stock market. It's going to save Wall Street from a black swan event. No wonder institutions are now becoming the diamond hands inside the crypto space, something only genuinely referred to as the retail section. It just, you should be, if you are somebody inside the crypto space, you're holding crypto assets inside the crypto space, you should be very proud that you're knowledgeable, that you hold crypto assets, and that you took that early action. Now, Visa. is ready for AI agents. So there's a future essentially coming where it's, we've discussed it essentially where Coinbase talked about it and some other firms talked about it in the future where AI, essentially robotics, essentially, or AI that lives just on your computers or your devices, will be the ones that interact quite a lot when it comes to essentially blockchain technology, payments and cryptocurrencies, and so on. Now, that was also something that was discussed by Coinbase quite a lot. Brian Armstrong essentially has talked about it many times, where AI agents and crypto come together and it's going to revolutionize the world as we know it. It's not just Coinbase anymore, it's Visa also. So here it is. Visa and Coinbase are both racing to integrate AI agents into their respective platforms. Yet their strategies represent two fundamentally different visions for the future of 2026 global economy. Visa is focusing on refining its legacy financial plumbing to support autonomous agents within a permissioned, centralized environment, ensuring that the traditional market space, traditional essentially financial institutions, retains control over identity and transaction verification. Whereas Coinbase is pushing for an unconditional surrender of centralized gatekeeping, building a decentralized on ramp where AI agents can hold their own keys and settle transactions directly on chain without human or corporate intermediaries. It is very different plans, I'll be very honest. Visa is thinking as a banker or essentially investor would think. For example, Visa is thinking in that old traditional mindset, whereas Coinbase is thinking about the future, essentially some Hollywood future, you can pretty much say, where AI agents have their own wallets and that the humans don't have to do anything. The AI agents makes their own transactions. They hold their own private keys. The divergence, essentially, between these two giants highlights a critical choice in how the national financial infrastructure will evolve. The permission path, which is the one that's Visa's taking, which is the very traditional sense, but also involving AI agents. But the AI agents don't hold the security phrases, don't really have their wallets. Even if they do, it's controlled by another human. Whereas Coinbase has no control whatsoever, AI just goes on its own path. Visa's model prioritizes consumer protection and existing regulatory frameworks like the US Clarity Act, essentially flipping the switches for AI agents within a safe, reversible, essentially banking environment. Coinbase is leveraging the high utility nature of decentralized settlement layers, allowing AI to operate as independent economic actors that can manage a ledger and bypass the traditional banking blockade. Infrastructure rivalry. While Visa approach mirrors traditional financial system, Coinbase vision aligns with the Genius Act goal of a fully autonomous and programmable global economy. As these two internets essentially as these two interns begin to take shape, the industry is closely watching which model will achieve faster adoption. Visa's strength essentially lies in its massive existing network of merchants and the trust of legacy institutions, while Coinbase offers the speed and flexibility of the 2026 global economy. Ultimately, the competition between essentially a permissioned web of agents and a truly decentralized agentic essentially web will determine the degree of the autonomy and privacy that users and their AI counterparts can expect in the future of finance. This sounds something like out of a Hollywood movie right now, to be fairly honest. What Coinbase is suggesting, it's cool, it's a new idea. AI agents having their own wallets. There's no human interaction whatsoever. They have their own wallets, they do their own transactions, they hold their own seed phrases. Whereas Visa's approach is more like, a human is behind the AI agent, the human tells the AI agent what to do, the human holds the seed phrases, the human is completely in control of that AI agent. Whereas Coinbase's feature is more like, the AI is conscious of itself, it has its own wallets, it does its own transactions, it does its own movements. It's two different approaches. Both are interesting. One is a lot more interesting than the other, the best to put it. Now, moving on from that to Bitpanda is what we're going to talk about next on tonight's live. But before we talk about Bitpanda, let's go through the comment section and then we go straight into Bitpanda news. So let's see where we were at. Let's tap the screen. Let's go, Lena. Thanks so much for saying that. Even Miles and family, Ian, good to see you. How you doing? Share the live and and retweet. Thank you so much, Peg, for saying that as well. If people think they are too late to get into crypto, they should think again. It's still early days. I agree 100%. I think Coinbase is going down the wrong road, Miles. I think Coinbase is going down the wrong road. Well, only time will tell, but it's an interesting one, to be fairly honest. It reminds me of some sort of like I Robot. If anybody's seen that film, Will Smith. Well, Coinbase is going down that route. I would say the I Robot route. It's an interesting one, and you've got to admire their vision and their innovative, essentially vision. To best put it. Now, crypto broker Bitpanda bets on banks and tokenization to expand globally ahead of AI plans. Bitpanda is aggressively positioning itself for a global expansion by deepening its integration with traditional banking institutions and doubling down on tokenization of real world assets. Bitpanda is also a very large crypto exchange. The European based broker is aiming to flip the switches on the traditional financial sector and interacts with the 2026 digital economy, offering a sophisticated on ramp for legacy banks to provide digital assets directly to their customers. The strategy is designed to modernize the financial plumbing of global retail banking, allowing established firms to bypass the traditional banking blockade and offer high utility investments and products within a regulated framework. The firm's expansion strategy serves as a blueprint for institutional grade growth of its anticipated public listing. By essentially providing the back end technology for major banks, Bitpanda is becoming a core component of the national financial infrastructure, ensuring that digital asset services meet the rigorous compliance standards of the US Clarity Act. The broker is also prioritizing the migration of traditional securities and commodities onto the ledger, a move essentially that aligns with the Genius Act vision of a fully tokenized global economy where ownership is programmable and instantly transferable. Also, there are rumors of an IPO for Bitpanda as well. Now, I just want to say Bitpanda is essentially somewhat of a Ripple partner. Bitpanda is now aiming to be some sort of a backbone for the European market space, as they would say. Now, just want to put that out there as well regarding essentially Bitpanda, Ripple, Bitpanda IPO possibility, Bitpanda, and now thinking about being some sort of backbone for European firms, for European essentially banks, and so on. It's impressive the moves that they are taking. Without a doubt, they are a huge, absolutely massive crypto exchange. Now, Australia is what we're going to be talking about on tonight's live. The Australian Senate essentially backs crypto regulation frameworks. So, Australia is now taking more steps inside the crypto sector, more steps you could say than the UK in terms of crypto regulations. Now, as I explained earlier on this live, UK, Canada, and the US have come together to stop essentially, when it comes to crypto transactions in terms of scamming or when it comes to sanctions and so on. They are doing that to safeguard the crypto sector. However, the UK still hasn't taken any steps, like, for example, a Genius Act version for the UK, essentially crypto space, or a Clarity Act, essentially regulation for the UK, similar to the US. We haven't taken steps like that whatsoever inside the crypto space. But Australia is now taking those sorts of steps. So, the Australian Senate has formally signaled its support for a comprehensive crypto regulation framework, a move essentially that marks a significant step forward, integrating the 2026 digital economy with the nation's legacy financial plumbing. By providing a clear guidelines for exchanges and custody providers, the Senate essentially aims the flipping of the switches from on institutional participation, moving away from a period of uncertainty and towards a structured on-ramp for digital assets. This legislative progress is designed to ensure that Australia remains a competitive player in the global settlement layers, essentially avoiding the pitfalls of the prolonged banking blockades that have previously hindered local innovation. The new framework focuses on establishing a high utility environment that balances essentially innovation with consumer protection as well. Licensing and custody standards. The legislation introduces rigorous licensing requirements that mirrors the transparency of goals of the US Clarity Act, ensuring that the old traditional market spaces, essentially of the Australian financial sector, can safely interact with decentralized networks. National infrastructure alignments. The framework seeks to modernize the national financial infrastructure by defining how essentially stablecoins and other digital instruments can be used for domestic and cross border payments as well, echoing the efficiency principles of the Genius Act. Consumer safeguards to prevent essentially an unconditional surrender of investors' safety. The bill mandates strict reporting and audited trails on the ledger, fostering a more transparent market for both retail and institutional participation. As the bill moves towards final implementation in Australia, industry leaders view the Senate's backing as a validation of the maturity of the digital asset space. Analysts suggest that Australia's proactive stance will serve as a blueprint for other nations looking to harmonize their traditional banking systems with the high speed requirements of the 2026 global economy. By creating a predictable regulatory landscape, the Australian government is ensuring that financial markets are fully equipped to harness the benefits of tokenization and decentralized finance while maintaining essentially integrity of its broader economic systems. This is incredibly, amazing to hear from Australia because just like the UK, they were tiptoeing inside a crypto space back and forth. But now Australia's Senate is completely on board with the crypto space. They're in the final stages of a crypto regulation coming out in Australia. That's very impressive. Also, who recently applied for a license in Australia? That was Ripple. So that's going to work out very favorable on Ripple's essentially side as well. They've applied for some sort of a license. And at the same time, Australia's Senate all of a sudden is now thinking about the crypto space and the final stages of a crypto regulation. So if you're in Australia right now, this is incredible news for you and for the rest of the world because Australia is a very massive market space. Now, European Central Bank. Let's talk about the Europeans and the XRP and Ripple space. But before we talk about that, let's go to the comment section first. This was happening there, and then we go straight into the next news. When I hear some criminal like here, been waiting for the market's dump when was supposed to happen, but doesn't look like it's coming now. What's your thoughts on another market dump happening, Miles, before the Clarity Act gets passed? It's a possibility. As I've said, and I'll stand by it, two things I said, two outcomes are on the table for this Clarity Act. I said they both have the same ending, it's just they're very different at the starting off, essentially. I said the first outcome is Clarity Act gets passed, crypto market reacts all positive, everything goes up, everything comes down, and then projects that only have utility go back up after a little period of time. The second outcome has the same ending, just a different beginning. The second outcome is Clarity Act gets passed, crypto goes down instead of up, and everybody's confused. Everybody's thinking to themselves, what happened? I thought the Clarity Act was the big one. I thought the Clarity Act was the fireworks, the rockets into Mars when it comes to the crypto space. Yet the crypto space went down when the Clarity Act passed. You give it a little bit of time, and then projects will start shooting up. They both have the same ending. It's just they're very different on the beginning part. The second, essentially option number two, which is crypto goes down instead of up, is a very manipulated market space. It shows you how manipulated the market space is. The first, essentially, outcome where the crypto market space goes up on good news, the Clarity Act is passed, it shows you the market space isn't that manipulated, but when it does come back down and then only essentially projects or utility go back up, there's a level of essentially manipulation right there, but only essentially crypto projects that have utility will go back up. Two different outcomes, same ending, just different beginnings. One goes down, one goes up, comes back down, and then goes back up. Essentially, it's the two outcomes that I've been saying for the longest time for the Clarity Act. So if you're expecting a one more down inside the market space, that could be your opening. If outcome number two essentially plays out, Clarity Act gets passed, nothing happens, instead we go down. And then suddenly we go back up. Now, XRP is doing tremendously well for itself. Tremendously well, especially today. And there are many reasons. One of them is what I'm about to share with you right now. The European Central Bank, as I explained essentially a week ago, even regarding the European Central Bank, regarding essentially XRP, Ledger, and Ripple, and so on, but the update on the timeline. The European Central Bank is set to greenlight their tokenized securities and collateral with the XRP Ledger in the mix. And that is going to be happening on the essentially at the end of March. The European Central Bank is reportedly preparing to authorize the use of essentially tokenized securities as eligible collateral on the landmark decision that could integrate the XRP ledger essentially into the Eurosystem's core financial plumbing. This move represents a significant of the flipping of the switches for the 2026 digital economy, as it allows traditional financial institutions to move beyond the legacy banking blockades and utilize high utility digital assets for liquidity management. By recognizing essentially on chain assets, the European Central Bank is providing a vital on ramp for the traditional markets of European banking to modernize their balance sheets using decentralized settlement layers. XRP Ledger essentially in this framework highlights the technical maturity required for national financial infrastructure. The essentially move allows banks to post tokenized bonds and securities as collateral in real time, leveraging essentially the high-speed settlement capabilities of the ledger to reduce counterparty risk and satisfy essentially the transparency goals of the US Clarity Act. Cross-border liquidity integration. By utilizing the XRP Ledger's native features, the European Central Bank can facilitate more seamless value transfers across the Eurozone, aligning with the global push for digitalized reserves, often essentially discussed in the context of the Genius Act. The authorization signifies an unconditional surrender of outdated restrictive policies as central banks essentially recognize the future of monetary stability and it relies on the integration of programmable high utility digital instruments. As the European Central Bank moves towards this green light market analysis view, the development as a validation of the long-term vision of the blockchain integrated 2026 global economy. The ability to use tokenized assets for collateral operations is expected to unlock billions in previously stagnated essentially liquidity, fostering essentially a more resilient financial system. For the broader market, the inclusion of the XRP ledger serves as a clear signal that enterprise-grade decentralized networks are no longer experimental, but instead becoming foundational pillars of the world's most critical monetary frameworks. End of the month is what's being suspected is that the XRP ledger is going to be essentially a part of the European Central Bank's essentially onboarding for tokenizations and bonds and yields and so on. So that is also pushing essentially because we are coming, we're mid-March essentially, you could pretty much say. So we are coming up to mid-March and going into the end of March, and the XRP ledger is essentially a part of this European Central Bank for tokenization and so on and so on. So that is, seen as a positive. XRP is reacting quite well towards the market space. Another aspect why XRP is skyrocketing today compared to the rest of the crypto spark, compared to the rest of the crypto space, is the debate between David Schwartz and a person who hates essentially XRP and is in love with Chainlink. Simplest way to put it. Ripple's CTO David Schwartz addresses XRP community concerns over the $750 million essentially share buyback. Now, I've discussed the Ripple essentially share back essentially, and when I essentially told everyone the positives of this buyback, and there really is no negatives. It shows you essentially what Ripple, that Ripple has extremely deep pockets, that Ripple is extremely confident in what they're doing if they're essentially doing a buyback, you could even say. So it just puts a par on par on a different level. But some people always want to pick at Ripple. Essentially what I need to tell everybody is there's a reason why essentially Solana don't pick on Chainlink. Why essentially Chainlink doesn't pick on Solana. There's a reason why Litecoin doesn't pick on AVAX. There's a reason why the AVAX community or AVAX founders don't pick on essentially Litecoin. There's a reason why the rest of the crypto space don't pick on each other, but they only try to point fingers at XRP or the XRP ledger or Ripple. It's because they're threatened essentially with what Ripple can bring towards the table. And some people might say, well, that's ridiculous. That's ridiculous to say that essentially they're threatened by Ripple. That's why they keep on mentioning it 24/7 and trying to compare themselves. That was sarcasm, by the way. These crypto projects, and it's not just essentially the haters or the communities or their armies of these crypto projects, it's sometimes their founders, their CEOs, their CTOs essentially that hate on the XRP ledger. And it just shows you that essentially they're picking on Ripple because they see them as a major rival, they see them as a major competitor, and they're angry that Ripple is taking so much more bigger footsteps inside this financial sector than they are, and that how they can't be recognized either. Ripple's chief technology officer, David Schwartz, has stepped essentially forward to clarify the company's recent decision to essentially execute a $750 million share buyback, a move that sparked intense discussions regarding the firm's long term focus on its native digital assets. David Schwartz essentially emphasized that the buyback is a strict maneuver designed to provide liquidity to early investors and employees without the need to go public in the current volatile environment, which is a positive. By opting for this path, Ripple aims to maintain its utility era momentum and internal stability as it continues to upgrade the financial plumbing for global payments with essentially the 2026 digital economy. The CTO's essentially explanation sought to bridge the gap between corporate management and the expectations of the broader ecosystem. Commitment to the ecosystem essentially health. David Schwartz essentially clarified that the buyback does not signal does not signal a shift away from the XRP ledger. Rather, it allows the company to consolidate its equity while remaining focused essentially on building high utility on ramps for institutional capital. Avoiding the IPO blockade. By providing essential alternative to traditional public offerings, Ripple's flipping of the switches on how it manages its private valuation, ensuring that the firm remains agile and underburdened by the short-term pressures often faced by the traditional markets, essentially. If Ripple was broke, like the other firms who might be trying to go essentially public, then the stock market will have to predict its next footsteps. And I'm not saying this happens for every company, but if Ripple went public and major institutions bought multiple shares of Ripple, they would have a say in Ripple's footsteps inside the financial sector because it's a public company then, and whoever controls the majority of the shares has technically the loudest voice in the company, which means Ripple can't progress on the vision that it has. Instead, it has to listen to its investors now. Whereas Ripple doesn't need to do that. They have deep pockets. They're doing a buyback in their own company. It shows strength towards their own company. It shows strength towards the XRP ledger. It shows strength towards XRP itself and to RLUSD. Yet, out of all those positives, a moron from Chainlink decided to pick on the XRP ledger and Ripple. Why? Because they're threatened. They're threatened about what Ripple can essentially bring towards the table. They're threatened essentially what XRP Ledger can bring towards the table. And I've seen many counts of this, to be fairly honest, over the years. I saw it once with essentially Tether. A member of Tether got onto Twitter when essentially Ripple announced RLUSD. Everybody can remember this. Just let me give you a little timeline. When Ripple announced RLUSD, one of Tether's employees or essentially head managers decided to go on X and say, "We are number one, USDT, nobody's better than us." Just to put in perspective, many other blockchain projects released stablecoins. Not once did Tether's employee head engineer or so on come out on X and say, "We're number one, USDT is number one." But when Ripple announced RLUSD, they got threatened. And straight away they said, "We're number one, don't forget about USDT." It shows you the level of where Ripple is at. That every footstep they take, they're getting criticized by people that are not on their even level, to be fairly honest. And then to fast forward a little bit more, when essentially Ripple was being compared to many other essentially, Ripple was being essentially toted by other essentially blockchain projects out there as well. And even Swift, you fast forward to Swift. Two members of Swift come out and say, nobody's going to use Ripple. Nobody's going to use the XRP ledger. Nobody's going to use XRP. Forget about it. We're number one. It's pretty much exactly, not the exact words, but the statement they were trying to put out on X. We're number one. We are Swift. Nobody's going to use the XRP ledger. Nobody's going to use Ripple. Let me give you a little drawdown. When Ripple was essentially, trying to build its company alongside banks, while every other crypto project didn't do that, just to put that essentially in perspective. Ripple was the only company that tried to build itself alongside banks. They went to the drawing boards and came back to the banks and said, use this. No, we're going back to the drawing board. No, we're going back to the drawing board. That's how Ripple built itself up. Did Chainlink do that? No. Did Litecoin do that? No. Did Solana do that? No. Did AVAX do that? No. Did HBAR do that? No. Did XLM do that? No. Did XDC? what I'm trying to say, and I'm not trying to essentially downgrade any of these crypto projects because they're all excellent crypto projects in their own essential perspectives, in their own categories. They're excellent crypto projects, no doubt about it. But there's levels to this. Whereas Ripple did do that, essentially, where any other crypto project didn't do that. And then Ripple was still being seen as speculative back then when it was, going back and forth with banks. And Swift was mocking the crypto space at that moment in time. When essentially Swift changed its tone? When there was a PDF document released essentially from the Bank of International Settlements where Ripple was put alongside Swift on a PDF document titled, which I love to mention, Cross-Border Payments. When Ripple got its name alongside Swift in a PDF documentation from the Bank of International Settlements, cross-border, essentially for cross-border payments, that's when Swift suddenly changed its tone and said, we're going to look into crypto now. We're going to look into blockchain technology now. Because that's when they saw the threat of Ripple happening, when they got listed alongside their own company. And then I said, in about 2 weeks, we're going to see Ripple and MasterCard announcements because Bank of International Settlements, MasterCard. In about 2 weeks, we saw the announcements of MasterCard and Ripple working together. There's a reason why all of these crypto projects never mention each other. Honestly, you never hear AVAX, picking on essentially Solana, or Solana picking essentially on HBAR, or HBAR picking on Chainlink, or Chainlink picking on Litecoin. But you hear it all the time from all these crypto projects, or from some of these crypto projects, always trying to pick on Ripple, always trying to pick on Ripple's footsteps, always trying to pick on the XRP ledger, always trying to pick on XRP, always trying to pick on RLUSD. It's only because they see it as a threat. There's a reason why these crypto projects don't mention each other, but they only mention Ripple, XRP Ledger, XRP, RLUSD, because they're threatened with every step Ripple takes in this financial sector, because they know that they are falling behind. And the only thing they have is by going online and criticizing their footsteps, hoping people essentially grasp onto their tweets and go, yeah, you're right. But whoever moron this person might be, who's essentially reading these tweets from these idiots online, essentially on X, on these all these social platforms, actually agreeing with people who are picking essentially on Ripple, or agreeing essentially with this Chainlink moron that's came out of nowhere, you're a moron. Simplest way to put it, you're a moron. Because whatever tweet that person put out, it's working on you. Even though that person is criticizing Ripple because they fear Ripple. And again, some people might say, well, that's ridiculous. They don't fear it whatsoever. Ripple's a nobody. Chainlink is better. Then why doesn't Chainlink pick on Solana? You never hear Chainlink picking on Solana. You never hear Chainlink picking on AVAX. You never hear Chainlink picking on HBAR. You never hear Chainlink essentially picking on XDC, XLM, Litecoin. But why is it they always try to pick on Ripple? Is it because Ripple's better than them? Because it is. Because you don't criticize people who are beneath you. You criticize people who are above you in this essentially competitive market space. You criticize the people that essentially in your category that you fear are growing faster than you are. You try to bring them down. You never try to push people further down. You always try to bring someone down. And that's why these companies always try to pick on Ripple, because they're trying to bring Ripple down to where they are, essentially, to their level, essentially, to bring them down back to their level. Because you never try to pick on someone who's beneath you. You're always trying to bring someone down who's above you. That's exactly what these companies are doing. That's exactly what Swift is doing, exactly what Chainlink is doing. Essentially, not Chainlink itself, but people that are essentially a part of it. Or Litecoin, people from Litecoin are doing it. Because you never pick on someone who's beneath you. You always try to bring someone down back to your level. And that's exactly what they're doing. Essentially, this entire argument that started with essentially, this Chainlink idiot, this moron pretty much, and essentially David Schwartz. David Schwartz is in the right 1 billion%. And that moron from Chainlink is in the wrong 1 billion%. In my opinion, that's pathetic from that Chainlink person. Absolutely pathetic. Because it just shows you how weak you are. Here's a statement. How about instead of crypto projects picking on each other, instead of crypto projects trying to bully each other, how about you show what you're made of instead? How about instead of crypto projects trying to pick at Ripple and say, this is wrong, that's wrong, this is wrong, how about instead you show what you're made of? Because if you're better than them, just show it. If Chainlink is better than the XRP Ledger, then show it. If Solana is better, then show it. If AVAX is better, then show it. If HBAR is better, then show it. Instead of pointing fingers and going, you're doing it wrong, because they're not. They're way above your projects. And again, I'm not saying Chainlink is bad, or Solana is bad, or Ethereum is bad, or HBAR is bad, because they all are great projects. But sometimes you get moronic employees from these companies or foundations that pick on Ripple, and it doesn't show strength, to be fairly honest. To some people, it might, because they're morons and they don't understand how the competitive market space works inside business. But the people that actually have some sort of knowledge, or people that have some sort of understanding, to us, it looks pathetic. You know the old saying, put your money where your mouth is. And that's why, essentially, that's what I expect from every crypto project out there. I want to see every crypto project out there put their money where their mouth is, but not to criticize and point fingers to their competitors. How about you just put your money where your mouth is? If you're the best, then prove it. But don't put out tweets and trying to criticize your competitors, because that doesn't show strength. It's pathetic and it's weak. Just put your money where your mouth is. If you're better, prove it. If you're better than Ripple, prove it. If you're better than the XRP Ledger, prove it. If you're better than XRP or USD, prove it. On that note, we have came to the endings of tonight's live as well. This is the CMF live show, stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. London time onwards for the next, essentially for the most recent news regarding cryptocurrencies, CBDCs, AI, politics, and regulations. Disclaimer of this live show, as always, is not financial advice, not financial advice, not political advice, and whatever I say is only for entertainment purposes. This was episode 458 of the CMF live show. Now, before we do go, let's go inside the comment section. Let's see what's happening there, and then we will call it a night. So let's see where we're at. We were here, been waiting. No. Hi, Miles. When are we expecting things to change? Or XRP is possible for banks to use? No, they're going to. Can you estimate a price movement for XRP this year because of a change? Good night, Miles, and all CMF. Thank you for a great live and news. Let's go, JP. See you tomorrow, same time as usual, brother. Good night, Miles and CMF. Great live. See you tomorrow. Free and forever. See you tomorrow, same time as usual. Great live. Take care, Miles and CMF. Ray, see you tomorrow, same time as usual as well. Thank you a bunch, Miles. Have a lovely night, all. Gene, Lena, see you tomorrow sometime as usual as well. Thanks, Miles. Good night, everyone. Stormy, see you tomorrow sometime as usual as well. Good night, Miles, and great life. Many thanks. See you tomorrow. Ian, see you tomorrow, same time as usual. Good night, Miles, and everyone. Great show as always. One love. See you tomorrow, same time as usual as well. Thanks, Miles. Much appreciated. Let's go, Shelly. See you tomorrow, same time as usual as well. Miles, can you briefly explain what you went through tonight? Taft, good to see how you're doing. Yes, we talked about essentially the criticism from a Chainlink member towards essentially David Schwartz regarding XRP's buyback, which is all positive, but somehow they try to turn it into negative. We also went through news on tonight's live show regarding essentially European Central Bank and XRP Ledger at the end of this month as a green light. We talked about Australia, essentially Senate, getting to the final stages of regulations for the crypto sector, which is incredibly impressive. We talked about essentially Bitpanda and their IPO plans and their tokenization, and tried to back the essentially European market spaces, also a partner of Ripple. We talked about Visa and Coinbase on tonight's live show as well, both having different essentially opinions on how AI robotics should be connecting essentially to, or AI agents should be connecting to the blockchain space. Visa is thinking on the stages of a human is still behind it, whereas Coinbase is thinking no humans are required, just AI and wallet and crypto together. We talked about the Nasdaq essentially and the New York Stock Exchange's owner putting the $126 trillion essentially equity markets on the blockchain. We also went through news on tonight's live show regarding, and also institutions are now being seen as the diamond hands of the crypto space. We talked about Metaplanet essentially raising $255 million to accelerate the Bitcoin accumulations. We went through news regarding the age of crypto, how we've moved on, essentially how we've moved on from speculation to essentially very foundational market space. We also talked about two biggest essentially of the meme coins that I've pretty much mentioned. When it comes to meme coins, I'm not a big fan of them, but I've mentioned all three that I think that could possibly survive everything that's thrown at them. And two of those essentially were Dogecoin and Shiba Inu, which are now put on the list of the T. Rowe Price, a $1.8 trillion essentially asset manager, is thinking about putting those two assets on their ETF essentially balance sheets. We also talked about not balance sheets but ETF sheets. We also talked about Bitwise's chief investment officer Matt Hugan, who has actually highlighted significant changes inside the market space when it comes to the crypto sector. We talked about Circle is pretty much up 100%, which is impressive to see. We talked about the US, UK, and Canada coming together to create some sort of operation called Atlantic Operation to safeguard the crypto space. We also talked about tonight's live show regarding the Middle East war situation and how the crypto market space is actually holding its ground. So those are the topics that have to be talked about on tonight's live. Like, comment, retweet, follow, subscribe if you already haven't. If you have, thank you so much to every single one of you CMF members. I will see all of you tomorrow, same timing as usual. Good night, Miles. Great live. See you tomorrow. Commenters, see you tomorrow, same time as usual. Thanks, Miles. We're still on track 2026. Yes, we are. Bull XRP, great live show, Miles, for your support. Good night, everyone. Let's go, Bull XRP. Awesome live, Miles, and thanks, and have a great night. See you tomorrow, same time, after 6 tomorrow, sometimes usual as well. And commenters, see you tomorrow as well. Paul, see you tomorrow. And Taft, God bless. Thank you. Good night. Let's go. I'll see everybody tomorrow, same time as usual. Everyone have a great day or a good night, depending on where you're around the world. Love you all. See you tomorrow, same time as usual, 10 p.m. Like, follow, comment, subscribe if you already haven't. If you have, thank you.